I believe, in the next 12 months-ish. So we're a couple months, about 3 months into the ETF, and we've gotten about 10% of what I believe is coming into this space from the registered investment advisors that control all the boomers' cash. So the boomers have 30 odd trillion with these financial advisors. Not all of them will. UBS still hasn't said I can buy IBIT in my account, right? It's my money, my account. I can't buy it because they know it's good for Vanguard, same thing. So there's going to be 300 billion, I believe, that's 1% of 30 trillion, that comes in to this space. Scott, that's actually more money than has ever converted to Bitcoin in 15 years.
Wait a minute, everyone. Welcome to Bitcoin Zella, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoin Zella offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoin Zella. Subscribe now. In today's video, Mark Yusko shares his new prediction for Bitcoin in 2024 and 2025, and why he thinks that we are on the early edge of Bitcoin adoption. Mark sees that Bitcoin ETF is a good move for Bitcoin to start the next big bull run. So without wasting any time, let's dive into the video.
The history tells us that the 12 months following the halving are the hyperbolic move cycle. And that makes sense, right? Just logically, what does the halving do? Well, it cuts the supply of block rewards that pay the miners for securing the network. So if the miners' costs are relatively fixed and their revenue goes down, in theory, a whole bunch of them would go away unless the price were to move. I think it's one of the most ingenious parts of the code, and there's a lot of ingenious parts to the code. But the fact is, in every previous halving, basically what happens is the fair value of the network doubles. Now, there is one nuance this time, and, I don't know if you've been following it very closely, but, there's the whole development of ordinals a year plus ago. And now, as of the halving, there was this development of runes, basically meme coins, or the technology to do meme coins on Bitcoin. And, everybody's talking about it, and some people hate it, and some people love it. The reality is, what it does is it generates a lot of transaction fees.
Yep.
And transaction fees also reward the miners. So I think this time, instead of the fair value today, Tim Peterson would tell you is somewhere in the low 50s. I'll even round down to be conservative to 50. Normally in a halving that goes to 100. But let's say this time it only goes to 80 because the transaction fee offset. That's made up math, but it sounds right. And then in a normal cycle, we go to 2.3x fair value because of the FOMO and all the momentum and the leverage. But I think leverage is lower this time. So
100, 200.
Do we get to 150? Yeah.
As expected, the cost of Bitcoin BTC mining has risen sharply since last week's halving, creating problems for an industry already suffering from declining profit margins. According to Julio Moreno, head of research at on-chain analytics firm CryptoQuant, the hash power required to produce 1 Bitcoin per day has now surpassed 1 exahash per second, E/s, for the first time in history. Halvings attack a vital component of miners' revenue, fixed block rewards. The latest one slashed the incentives from 6.25 BTC to 3.125 BTC per block. In simpler words, after each halving, miners have to double their mining investments to break even. This was further scrutinized by MB Crypto with the help of Glassnode data. The total number of bitcoins produced fell from an average of 900/day before the halving to between 400 and 500 since the event. Alongside the same, the hash rate, the computational power needed to create new blocks and add them to the Bitcoin ledger, rose significantly, hitting 721 EA/s earlier in the week. What has added to their woes is Bitcoin's unimpressive show on the price charts. After a brief bullish impulse, the King coin slipped, with the crypto down 1.63% at press time, according to CoinMarketCap. In fact, because of the aforementioned slump, hash price, which is a barometer of Bitcoin mining profitability, fell by 72% over the week. While block rewards may be becoming an unviable revenue stream for miners, there is much to look forward to from transaction fees. Crypto reported previously how the Runes protocol led to an astronomical surge in fees immediately after the halving, helping offset the losses from the halving. In fact, around 3/4 of the cumulative miner earnings from halving day were composed of fees paid by users.
And that would be by April, May of 25.
Exactly.
So by the end of this, now, I think it all depends. I've been saying that this can be the best Thanksgiving ever, right? No more, you're not welcome because you're a crypto person in the family. People are going to be like, oh, come on. Come, it's going to be awesome. And people are going to celebrate the crypto people in the family this year. And so if that FOMO period is like the previous two, where from November to December, go up orders of magnitude. I mean, remember, we went from 10,000 to 20,000 in 8 weeks. I mean, speed and low cost are really, really important. I mean, I've had this debate with people recently. The fact that the Solana network crashes all the time and it gets overloaded and transactions fail, yeah, that's a problem. But the reality is when it works and I can send USDC instantaneously for fractions of a penny anywhere in the world, that's better. And someone asked a question I thought was interesting, said, if Ethereum didn't exist and it was invented today, would anybody use it? That's interesting, right? Because it is slower and more expensive than Solana and others. So why would you go that way? Well, the reality is it wasn't invented second. It was invented first and has a larger installed base of developers. So it's not the best technology that wins. It's the technology that gets critical mass first. That's how winning.
Renowned trader Peter Brandt recently published an insightful analysis titled, "Does History Make a Case that Bitcoin Has Topped?" In his new essay, the veteran trader delves into the concept of exponential decay, suggesting that Bitcoin's bull market cycles have gradually lost momentum over time. Brandt highlights 4 significant bull cycles in the history of Bitcoin, with the current surge marking the 5th. He notes a concerning trend. Each successive cycle has seen a diminishing exponential advance, indicating a loss of about 80% of the momentum from previous cycles. Applying this trend to the current cycle, the expert projects a potential peak of around $72,723, a figure already reached in recent trading. While acknowledging the historical impact of having events on the Bitcoin price, Brandt emphasizes the sobering reality of exponential decay, suggesting a 25% chance that BTC may have already reached its peak for this cycle. In the event of a market top, he speculates on potential price retracements, foreseeing a decline to the middle of $30,000 per BTC or even revisiting lows from 2021. Despite the bearish implications, he views such a correction as potentially bullish in the long term, drawing parallels to similar chart patterns observed in the gold market. Brandt concludes his analysis by acknowledging the weight of the data, stating, "Do I believe the analysis just presented? I don't want to, but the data speak for itself. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.